Awesome. Okay, I think we are actually live here. And thank you to everyone who is taking the time to join us here on Zoom, as well as all of you joining us live on social media. Today's session is to talk about the ultimate corporate tax checklist and process, because we know that um, the success of your corporate year end is dependent a lot on uh, this process. So we wanted to take this opportunity to everyone walk you through some steps that will make it easier for you as well as easier for us, which will help to reduce the amount of time that we spend and obviously the amount of costs associated with it. As a bit of housekeeping, I would like to say anyone who is joining us live on Zoom, you can post your questions in the Q&A and I will do my best to answer those as we go throughout the session. If you're following along on social media, you can post a comment and we will have our team relay that comment and feedback over to us live in Zoom and do our best to answer it live. Of course, if we miss it, we'll do our best to come back and answer those in the comments later. And we do always love engagement and comments and likes and shares because it helps to spread the message. So please, if you wouldn't if you'd be so kind as to comment and share, that would be greatly, greatly appreciated. As I said, today's session is talking about the corporate year-end checklist and the corporate year-end process. So for those of you who are not familiar, we do have the checklist available. Let me see if I can pull it up on our website and share it with you on our website. Zoom, where are you? Let's share our screen really quickly. So the checklist can be found on cpa4it.ca/corporate-tax-checklist. And here it'll outline what information is required with some links to things like our CRED and Excel manual, which is another important thing. I do see some questions in the Q&A popping in and just confirmation that my audio is great. So awesome. Thank you for doing that for me. Much appreciated. Now, I don't want to share my screen too long because I do want to be able to make sure that we have some content available for our social media, which doesn't work very well when we're sharing our screen. Again, that checklist is available to you on our website all year round. In addition, our process will be to send reminders as we get closer to your year end and after your year end as we approach the tax filing deadlines. For those of you who are not familiar with your corporate tax deadlines, if you were a small business, less than $500,000 in net income, then your filing deadlines are going to be 3 months and 6 months after your year end. So if your year end is September, your GST, HST returns and filing are due by 3 months after your corporate year end. So December 31st, 3 months after September 30th. Your corporate tax is a little bit more tricky. Corporate tax, they expect you to pay by 3 months after your year end by that December 31st deadline, but they don't expect you to actually file your return until 6 months after your year end, which would be the end of March. That is typical of CRA where they expect you to know what to pay before they expect you to actually prepare the numbers to actually tell you what you truly have to pay. Which is why for a lot of the clients, if we're up against the deadline, we do our best to do estimates, because if you do get the payment in, if you overpay, obviously no interest, no penalties, and you'll get your money back when you file. If you underpay, they will charge you interest from that 3-month deadline until the 6-month deadline. And at the 6-month deadline, if you haven't filed, they will continue to charge you interest, plus they will now charge you a late filing penalty. So obviously getting your information and your return processed on time is an absolutely critical point of view. And we have far too many clients who leave this to the last minute. And I can appreciate that, going to your accountant is kind of like going to your dentist. No one really wants to do it. There's work that you have to do to prepare the information. It usually results in some money you owe the government. So it's not the most fun process, but it is absolutely imperative. And if you avoid it and you bury your head in the sand, ultimately CRA is going to come after you. They're going to likely do what they call an arbitrary assessment, which is estimate what they think you owe, and they're going to estimate on the high side, not on the low side. And then they're going to come after you for the amount they think you owe. And that, in most cases, is more than what you truly owe. So staying on top of your filings is absolutely critical. And that's why we're putting on this session, is to see what we can do to help those clients who are struggling to get their information on time. And also those who feel like they've gotten the information to us on time, who are struggling with, why is it taking you so long to complete my tax return? And what can I do to make this process easier and smoother? And a lot of that comes down to the information that you provide to us. So if you want to have a faster turnaround time and get your tax return processed as quickly and easily as possible with lower accounting fees, the key here is to give us all the information up front, not in drips and drabs. Because when it comes through in drips and drabs, what that means is we're going to have to follow up and look at the file multiple times, which means whoever's working on the file has to reacquaint themselves with your file. And we obviously have more than one client. So if your information is not there and they've had to go back and collect missing information from you, they're putting your file on hold and going on to the next file. And they're not coming back to your file until they've completed that file and any other files that they've taken on in the process. So one, it's deprioritizing your file because we don't have the information to proceed. Two, whatever length of time that we spend going back and forth collecting information is really going to slow that down. So ideally what you're going to do is make sure that you've gathered all of the information and upload that to our document management system, which we use Lisio. Hopefully most of you are familiar with how to use that. Happy to answer any questions for people who are struggling with Lisio. We have heard some feedback that it's not everyone's favorite platform. And we are looking in 2026 at trying to migrate to something better and come up with better solutions. As you guys know, we are a technology forward firm. We're always looking for better solutions and ways that we can make the process smoother for you. But ultimately, if you're looking for timely submissions, lower accounting fees, one of the most important factors is gathering all that information and providing it to us upfront without us needing to go back and forth with you multiple times. So how you would provide that information to us should be through Lisio. We tell people over and over and over and over again, please do not send information to us via email because email is not secure. And unfortunately, we have clients send that to us, send us confidential and personal identifiable data through email, which means that anyone could ostensibly pick up that information in transit and be able to use that for nefarious reasons. So the method that we use is a platform called Lisio. It's a secure document repository where you can log in. You will be able to see all the documents that we have provided you, tax returns, financial statements, any reports or anything that we might be providing for you will all be available in that portal. And that portal, you can search by year, you can search by tags. And the one thing that tends to trip people up when it comes to our Lisio platform is this concept of tags. And tags are kind of like a way of having a folder structure, but it's better than a folder structure. And most of people struggle with this because they are used to their computer and the folder structure, and a folder is within a folder, and the file is within the folder that's within the folder, and they just go by year and then by service and down to the document. What tags allow you to do is have a document that might reside in multiple places. For example, let's say a T4 slip. That might be in with part of the T2 return as well in your finalized package that we provide to you, but it would also be available to be under the T4 tag. So you could search for just the T4 or you could search for T2 and it would appear in both. And that's how that tagging structure works in a format that is a little bit different than what some people are used to. But the purpose of Lisio is to provide a communication portal where all the messaging from our firm is available, all of the documents from our firm is available, where you have the ability to get a mobile app, snap pictures with that mobile app of documents that we need you to provide to us. be able to access all of that in a secure and safe environment. And again, if you can make sure that in your process, you go through that checklist, gather all of the information, make sure it's provided and uploaded via Liscio, our team will get notified and we will begin our process. Our process has multiple steps in it, which includes multiple cross validations and reviews to ensure that the quality of the file is at its absolute top. So just to give you some background on what our process is and how that works, once you submit the information, we will have a team member review the file, make sure that all information has been provided. If all the information has been provided, great, we move on to data entry. If not, we will send a follow-up to the client saying, hey, this is the information that we needed. We've also recently added a voice agent that will call and follow up with you and let you know in layman's terms what exactly it is that we are looking for. As well, you can communicate with that AI agent, and it has the ability to help you learn how to use Liscio, or if you're struggling with QuickBooks Online or where you might find documents. It's a voice agent that can help you with that. It doesn't have access to any of your personal identifiable data. It does have the ability to create tasks in our CRM and connect with us so that if you have a conversation with the AI agent and you're requesting information from us, a task will flow through to a human. You can always transfer over to a human, but those follow-ups will begin that sort of loop of requesting information, getting back information, making sure we have all the information again, and all too often seeing something is still missing, going back again until that loop is completed. Once that loop is completed, it will go on to the data entry technician who will begin preparing the file for your account manager and your accounting team. This means preparing a casework file, preparing financial statements, and preparing tax returns. Once that is done, your accountant will review the file, make sure that there are no issues, go through any queries that they might want to ask you in the review meeting. Once that's completed, we will let you know that the file is ready for review. You'll book some time with your account manager. We will go through that file with you, maybe come up with a few other issues and changes that we need to do. And there is, again, a loop there for any changes that we need to go through to make the corrections. We then finalize the package. It goes to our final quality control done by our office manager, who's been with us for decades, knows more about tax than I do, than anyone I've ever met. She does a final quality control. Assuming it passes our quality control, the documents will then be sent out to you for signature. Once you sign the documents, we will then go ahead and file on your behalf. So that process can take quite a bit of time. So we need to make sure that we can shrink that time as much as possible because, like I said, we have many, many, many clients, thankfully. And if your file goes into one of those loops where we're waiting for information, you are deprioritized and someone else gets worked on and we start making their file the priority. And that might mean we don't get back to your file for a day or two or a couple of days. So making sure that you can provide all that information in a seamless process will ensure your file is completed as quickly as possible and at as low a cost as we possibly can. So I guess one of the things I want to make sure is clear is what information that we do need to collect from you. So obviously we need some way to track revenue, expenses, assets, and liabilities. There are a number of ways that you can do that. You might have us do your bookkeeping for you, in which case you don't need to fret. You might be using QuickBooks Online. You might be using QuickBooks Desktop. You might be using Xero. You might be using Wave. You might be using our CRED manual, which is a proprietary Excel document that we use that stands for Capturing Revenue and Expense Data, which is a much, much simplified, I wouldn't even call it an accounting tool. It's a spreadsheet where you're tracking your revenue and expense data. But whatever format that you're going to use, we're going to need that information. And the key with that is something we call bank reconciliations. So for those of you who are not familiar with a bank reconciliation, this means that every line item on your corporate bank account or corporate credit card has been accounted for. All money coming in, all money going out. It has to reconcile. So that means that the opening balance plus the transactions must equal the closing balance. Now in our CRED manual, you would just do that on your spreadsheet. And as long as your opening balance plus all your transactions equals your closing balance, you're good. In QuickBooks Online, they have a specific reconciliation tool that makes that even easier. It helps to point out where there might be gaps or issues. And pretty much every accounting platform is going to have some form of some method to do a bank reconciliation. But this is one of the prerequisites that we must have completed before your accountant will even consider reviewing your financial information. We've got to have those banks and corporate credit cards reconciled. So hopefully we have your revenue, your expenses, your assets, your liabilities, and any corporate bank accounts or corporate credit cards that have been included. Obviously, we want the statements so that we can confirm that the opening balance plus the transactions equals the closing closing balance. We do prefer PDFs. I know that in this day and age with AI, PDFs can be modified and manipulated probably just as easily as a CSV. So we're getting more open to accepting a CSV, but we would much rather have a PDF because that's what we're going to reference. If we ever need to go through a review with CRA, they're going to want to see the statements. So we'd like to have those in the file, which is why we do want the statements. So that is sort of the bare minimum. So we're going to have the revenue, expenses, which would include assets and liabilities, your bank accounts, your bank reconciliations. And then there's a few other additional information that we might need depending upon your file. So if you have corporate investments, we're going to need all of those investment documents. And that can mean obviously the transaction statements themselves, but we also need to have any T-slips, T5s, T3s. If you've got foreign investments worth more than $100,000, then you need to have a T1135. Biggest issue that we often see with the T1135 with brokerages is they will provide you that on a calendar year end, so January to December. But we need it for your fiscal year end. So if you're a September 30th year end, which we talked about earlier, we'd be looking for October 1st to September 30th, right? So when your brokerage, when you reach out and say to your broker, hey, I need a copy of my T1135 or statement of foreign investments, they're going to say, sure, here it is, and give you the December one. Then you're going to send it to us, and then we're going to say, nope, that's actually not what we're looking for. We need it for your fiscal year end. You'll go back to your brokerage. Depending upon the sophistication of your brokerage, they will say, we can't do that. I can tell you after, doing this for multiple decades, that is not true, even though the T1135 hasn't been a requirement for multiple decades. It's not true. I don't think we've come across a provider who will not inevitably provide that. And that is a very, very, very important document because a T1135, which is the reporting of these foreign assets, has no tax implications whatsoever, right? It's not going to increase or decrease your taxes. And it is a separate document than your T2, your corporate tax return. And if it's not filed, there is a if it's not filed on time, there is a penalty, and it is $25 per day, up to a maximum of $2,500 per year, per fiscal year. So if you've got a corporate account with assets and investments, you want to make sure that that is provided to us in a timely fashion. The other thing that we will ask if you've got corporate investments is we have a simplified method for calculating your investment income and what we call your ACB, which is the book value that goes on the balance sheet of your financial statements. And we have to calculate that every year based on all the transactions, all the buys and sells that are going on in your investments. And in fact, using the traditional method, if you have a high volume of transactions, that can get very, very expensive. It's one thing that people don't often mention about, when your corporation becomes a holding company, you've got these investments and you're thinking, oh, well, this should be cheap. All I've got is investments. Those investments can take more time than a corporate tax return for a relatively simple, independent contractor. And a lot depends on volume. We have some clients who are day trading and the volume can get quite intense. Now, for those clients who have a large amount of volume or are comfortable using the ACB and capital gain calculations provided by their broker, we are willing to do that, but we do require you to sign a document that tells us that you have approved us to use those numbers, and that's where we're pulling them from. Because as a professional accounting firm, we do have an obligation to ensure that the information filed with the CRA is reflective of the information provided to us. And we do have some responsibility there. So we need to have that approval from you to use this method. And why that's so important is because, unfortunately, brokerage statements are often wrong. They can be wrong because the opening balance is wrong, because maybe you moved, from one brokerage to another, and instead of using the ACB or the book value properly, they took the market value as the opening balance. It could be that they haven't calculated distributions properly, of return of capital properly, and far often, or very frequently, we see brokerages calculating that incorrectly. But it's often not calculated incorrectly by a material amount, and many people are happy to use that number. And as long as you're happy to take on that risk and that liability, and relieve us of that liability, we are happy to do that. But those investments can be one of the trickier aspects of what information we need to collect and remit. Bank statements you wouldn't think are much of an issue, but you'd be surprised at how often we'll get 12 bank statements, but 2 of them are from July and we're missing August or something like that. And this is because oftentimes many people are going in and downloading everything at the end of the year. And it's really easy to just click the wrong month twice instead of clicking August, thinking you've done August. And, the document name is just defaulting to file 1 or untitled 1 or something like that. So double check that you've actually got all the statements and that they actually are chronologically there, because that can really cause consternation, because we'll ask it for you. You say you provided it. We'll tell you, no, you didn't. You'll say, yes, I did. And we'll go back and forth. And I can't tell you how many times we've had that issue. I know, and we are working at doing our best because of the structure of our organization, where we have multiple team members, where we have accountants and we have account technicians and we have an admin person working on your file, that sometimes, communication is not perfect. And we are absolutely working our best to implement systems. That's why we use Listio instead of email, because, email is siloed. And if you send an email message to Michael and Michael hasn't forwarded that to Fahim, then Fahim doesn't know about it, and he asks you again for the document, because usually it's the technician who's working on the file, not or who's following up on the missing information, because the technician is there to get the file right and ready for review by the accountant. The accountant is the more expensive resource, and we don't want to spend your money on the more expensive resource until we've got the file where we need it to be, which is why, Fahim and Ramesh are the guys who are going to be reaching out to you more often about your file to collect information, or Carlos if you're on the bookkeeping process as well. So Fahim, Carlos, and Ramesh are the guys who are reaching out to you more often, and they're going to be probably the first person that you should go to if you have any questions, because their time is going to cost you less, and they are going to bill you for the time that they spend. So 1, it's going to cost you less. 2, they'll probably have more intimate knowledge of your file. Your accountants are going to have more tax knowledge and more depth and breadth of knowledge to make sure that the file meets all of our quality control standards and all of our obligations with the Institute of Chartered Accountants and CRA. But you want to only utilize their time when you can't get the answer from your technician. And your technicians will always have access to them, and often at a faster turnaround time, because we've got internal communication through Teams where they can reach out and connect in a faster way than you might be able to. So always start with your technician and elevate up when you do have questions. We also have a process, as many of you know, where we will update you on what stage your file is in our process. We talk through that workflow. And as your file progresses through that workflow, we will send you notifications when the file is promoted to say, hey, your file is now with Fahim and he's working on the data entry. Then when Fahim completes it and transfers it over to Michael, it will say, hey, it's now progressed to the accountant review and your file is with Michael. So you always know who the file is sitting with if you look at your Listio communication. So hopefully that does help. Now, if you are a new client to us, there's a couple of other pieces of information that we need to gather in addition to your revenue and expenses, your bank statements, your tax slips. We'll also need information about any past returns that you've already filed. So if you're coming from an existing accountant and you've filed the 2024 year end already, we will obviously want a copy of that, as well as um, uh, any of the adjusting journal entries. So what we're looking for there is what we call a full financial statement package, which would include your income statement, your balance sheet, your general ledger, your adjusting journal entries, and those are probably the most critical things, and a trial balance as well. So those are pieces of information we're looking from your past accountant. Now, sometimes if you have worked with a let's call it a smaller firm who may not be even a CPA, and you only have a tax return, this again could cause a little bit of extra time in those upfront processes. But we can generally still work with a tax return. It just means effectively reverse engineering an income statement and a balance sheet to be able to get the information that we need. We will also need, if you are a new client to us, copies of your articles of incorporation, your initial minutes. So hopefully everyone is aware that as an incorporated entity, you are required to keep a minute book. And this is the minutes of all the director's resolutions. This might be how much you're paying yourself. This might be if you're doing any dividends. It might be if you're doing any home loans. It might be who the shareholders are, who the directors are. This is all important information that if you are ever audited, it is the first thing the CRA is going to ask for. And if you do not have a copy of it, they are going to look less favorably on you than if you have a very well-organized minute book. Now, back in the day, that used to be one of those maroon physical books and you would print it out. More and more now, that's a digital document and just a folder structure. We do keep it available for you in Lisio as well. We also keep a separate copy as well in our back end system in case anything ever happens to Lisio. But those minutes are important to keep, and we will need them if you're becoming a client for us, because we need to know what the share structure is. We need to know who the directors are. This is all information we need in order to begin working on your information. Of course, if you're a new client, we will also need access to CRA My Business account, and ideally both My Business account and CRA My account. For those of you who aren't familiar with the CRA online accounts, these are incredible tools for us that avoid us having to call CRA and be on the phone with them. In addition, if you were not an authorized representative for you, we can't even call them and be on the phone with them and wait on hold for an hour and a half to get information that unfortunately is all too often wrong. But if you can get us online access, that allows us to be able to go in, to be able to do things like transfer payments, to be able to, do an election to switch from the long method of GST to the quick method of GST, HST, which for most of our clients is going to be much better for them. It gives us the ability to check whether payments have cleared, whether you've made the payments, and makes our whole process substantially easier. So typically those aren't required every year, but they will be required whenever you are a new client. In addition to all this process for your year end that we've talked about, which is all relevant no matter what your fiscal year end is, there is one other touch point and one other piece of information that we may need to gather throughout the year. And this is related to your tax planning. So with most of our clients, your tax planning is done with your account manager at the end of the year. And with a corporation, you have the ability of taking your remuneration, how you're taking money out of your corporation, as either a loan, a dividend, or a salary. And you might income split that salary or that dividend with family members, depending upon the structure of your organization and the structure of your family. And you might also split that salary over multiple years. Now, a dividend can be split over multiple years like, for example, again, if let's take that September 30th, 2025 fiscal year end into example. With a dividend for that fiscal year end, I could do a dividend in 2024 from September to December, or I could do a dividend in 2025 from January 1 to September 30th, but I can't do one into 2026. Now, for that same year end, if I'm doing a salary, I can do a bonus out up 180 days from the fiscal year end of your corporation, which would, from 180 days from September, put you into March of 2026. That means I could be doing salary for 2024, 2025, and 2026. What that salary will be and how that split should be discussed with your account manager. Make sure that you have a holistic plan. But sometimes, depending upon your year end, you might need to do some additional planning. Let me take a different year end, for example. Let me say a March 31st year end. And let's say that you complete your March 31st year end, and at March 31st, you had taken out, I don't know, $30,000 out of the corporation. And you declared that into 2025, or maybe even into 2024. Well, you're not going to bring in your next year end until well after March 2026, which is past the filing deadline for T4s and past the source deduction deadline for any payroll remittances. So in November and December, we reach out with what we call a source deduction campaign. Well, we'll reach out to see if you want to do any additional tax planning. And what we're looking for is to find out how much money have you taken out since your year end. So since March, we've already declared, I don't remember what I said. Let's say it was $30,000 in salary into 2024. But how much money have you taken out of your company from March to December? And we've got a form where we gather all that information and we will do a bit of analysis. And if we find out, let's say that you've taken out another $70,000, then we'll want to figure out, do we want to give that $70,000 to you in 2025 on top of the 30, have a total income of 100, or do we want to take maybe 30 of that and push that into 2026 and only have 40 plus the 30 from before and have 70 in 2025? That planning is done, like I said, usually starting around late October through to mid-December. Unfortunately, it is too late at this point because the absolute latest deadline is the 15th, which maybe you can make a payment for today that would clear by the 15th, but we're not going to have time to sit down and do any planning with you at this point. So you missed the boat for this year. And if you're like, oh shoot, I haven't paid my source deductions, what I always tell people is make sure that you pay the minimum CPP, which is about the maximum CPP, which is about $9,000 for each person that you want to do any income splitting with. That gives us some leeway in helping us to tackle issues with penalties, which I'm more than happy to explain in person if any of you have any questions about that. We can talk one-on-one. But that will happen in November and December so that you can get your payment in typically by January 3rd, which is usually the earliest deadline for payroll remittances. It could be January 3rd, 10th, or 15th, assuming you made payroll or you paid employees in December, which is the last month of the fiscal year. Again, if you have questions about payroll taxes, we have previous webinars. I strongly encourage you to go check our YouTube channel and check those out because that is a complex topic that I am not going to cover here today. And in fact, I think I've covered just about everything. Throat is getting sore here. I've been talking for too long. But I do want to take this opportunity to open it up for any Q&As. Does anyone have any questions about our process or what we could do to make it easier for you? Any suggestions on how we can make our process better? We'd love to hear it. You can post it in the Q&A. In addition, if you would like to just verbally ask a question or make a comment, you can raise your hand and I will allow your microphone to work. And of course, if we don't have any questions today, I will know that I've done a terrible job and was not interesting at all, and therefore I will wrap early. Oh, Leanne, you're back. Hi, Leanne. I hope life is treating you well. You should go for a coffee in the new year. Any questions from anyone else on the call? We've got a number of you here live. I don't know if anything's coming through on socials. Feel like this session was a miss. Not sure we're going to bring it back next year. No one has any questions. I guess maybe I did an amazing job, but I never believe that. Ultimately, thank you everyone for taking time out of your day. We will wrap here. I will wish you all the best, and we will see you in 2 weeks for our next session, which is, maybe I'll just look that up, tell you what our next session is. So what do we got coming up in 2 weeks? They're not on our website. See, we need to fix that. Okay. Iman, can you maybe ping me? What's our next session? It's not on the website. Iman, are you here with me? I guess just stay tuned to our newsletter and our messaging, and we'll let you know there. Sorry, everybody. Oh, yes, this is actually going to be a good one. How AI is reshaping entrepreneurship. So I'm really excited about this. I'm also, by the way, anyone interested in Dext or Dext, I'm actually doing a session with them tomorrow on AI with another accountant bookkeeper who does a lot of AI stuff, Tanya Hiltz. So I encourage you to come check out that session. You can find it on Dext's website. It should be a really fun and interesting one. Thanks, Iman. Appreciate that. And have a great Tuesday, everybody. Bye for now.